Today, we're diving into global payments, a real titan in the world of payment processing. You know, the company that lets a coffee shop or a giant retailer actually take your credit card. But this isn't just a simple check-in. This is about a massive player making a huge, company-defining bet, all while its stock is getting hammered. So the big question is, what is really going on here?
And that brings us right to the heart of it. The market has pretty much tossed global payments into the bargain bin. But is this a golden opportunity to snap up a world-class business on the cheap? Or is it a classic value trap where all those hidden risks actually justify that super low price?
And when I say on sale, I am not kidding. Year to date, the stock's down about 25%. Now, when a company of this size takes a hit like that, you have to ask, what on earth is the market so worried about? And maybe more importantly, could the market be wrong?
To figure that out, here's how we're going to break it all down. First, we'll look at why GPN is at such a critical crossroads. Then, we'll dig into the bull case, the argument that they're building a fortress. After that, we'll hit the bear case and all the risks, check out the price of this massive bet, and then, finally, we'll reach our verdict.
Okay, so let's set the stage. Global payments is right in the middle of a massive strategic pivot. I mean, they're swallowing a transformative acquisition, they're dealing with a shaky economy, and now they've got the activist investor Elliott Management basically looking over their shoulder. The pressure is definitely on. And to really get how they got here, you just have to look at their history of making these incredibly bold moves. Back in 2016, they bought Heartland, which literally doubled their size. Then in 2019, a monster merger with TSYS created this diversified powerhouse. And now they're going all in on buying Worldpay. A deal so huge, it actually brought an activist investor to the table just to make sure they don't mess up the integration. This is a company that does not shy away from big bets. So how do all these big moves add up to the bull case? Well, the optimistic view here is that GPN isn't just getting bigger for the sake of it. They're trying to build an impenetrable fortress. The whole strategy is about creating this unbeatable competitive advantage through just sheer overwhelming scale. Now check this out, because the scale of this bet is just staggering. With the Worldpay deal, Global Payments is on track to quadruple its annual payment volume. We're talking about going from $1 trillion a year to an incredible $4 trillion. This isn't just a small step up, it is a quantum leap designed to create a gap that competitors, frankly, just can't cross. And hey, this isn't just some theory they cooked up. It's a core principle of the entire industry. As Morningstar puts it so well, scale is what creates the moat, you know, that competitive advantage, in payment acquiring. The more transactions you process, the lower your cost is for each one, and that gives you a massive structural edge over any smaller players. So it all boils down to this pretty simple three-step fortress strategy. First, you acquire that unparalleled scale with Worldpay. Second, you use that scale to embed your software deep into a client's daily operations. Think their point-of-sale systems. And that leads you right to step 3. You create stickiness, making it so difficult and so expensive for a customer to leave that they basically become a locked-in, long-term source of revenue.
But of course, no bet this big comes without some serious risk. The bear case argues that, yeah, the strategy sounds great on paper, but the road to get there is an absolute minefield. The market isn't so much skeptical of the destination, it's just terrified of the journey.
And this slide really lays out those landmines perfectly. First, you've got the absolutely monumental task of integrating Worldpay. Then, you're super exposed to small business spending in a really shaky economy. You've got these nimble fintechs like Stripe and Adyen constantly nipping at your heels. And to top it all off, you're taking on a mountain of new debt to make the whole thing happen. This right here really puts that competitive challenge into focus. On one hand, Global Payments' strength is its massive scale and deep integration with established businesses. But its fintech rivals? They're playing a totally different game. They focus on speed, super easy-to-use tools for developers, and a slick, digital-first experience. It's a classic battle: incumbent power versus nimble disruption.
So, with all this high-stakes drama going on, what's the price of admission? Let's get into the valuation and see what investors are actually paying for this bet.
So right now, the company is trading at around 11 times its projected earnings. Now, to put that in perspective for you, this is near historic lows for GPN. This is a company that has historically traded much closer to 18 or even 20 times earnings. The market is clearly pricing in a lot of doubt. But contrast that with Morningstar's fair value estimate of $131 a share. That suggests a potential upside of over 35% if, and it's a big if, the company can pull off its plan. That gap right there, that's the tug-of-war between the market's fear and the analyst's faith in the strategy.
And this table just lays out the financial trade-off at the very heart of the deal. Look, in the short term, their leverage, that's their debt compared to their earnings, is jumping up significantly. But the long-term prize is massive. We're talking over $600 million in annual cost savings, plus another $200 million in new revenue opportunities. They're taking on short-term risks for the promise of a much more powerful and efficient machine down the road.
So, after weighing the potential of this fortress against that field of landmines, where do we land? Let's bring the bull and bear cases together and try to reach a final verdict. You know, the entire investment thesis really just boils down to this one sentence. This is a high-stakes bet on the power of scale, and its success or failure rests almost entirely on one single thing: flawless execution.
Ultimately, the argument here isn't really about whether the strategy is the right one, because in this industry, scale is king. The entire case hinges on one simple question: can management pull off this massive integration without a hitch? If they can deliver on those promised savings and synergies, then the current stock price looks like an absolute bargain. But if they stumble, well, all those risks we talked about become a very, very painful reality.
And that leaves us with a fascinating question, not just for this company, but for the entire industry. Global Payments is making the ultimate bet that in the future of payments, sheer size, scale, and efficiency will win out over the speed and agility of its smaller fintech rivals. How this all plays out won't just decide the fate of one company, it could very well define the next era of global commerce.